All right, everybody. Should be broadcasting. Should be on YouTube. All right, I'm going to get started with the disclosure. I am an associated member of T3 Trading Group, which is an SEC registered broker dealer and member of FINRA SIPC. All trades placed by me are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Oh boy, it doesn't really show how active I was trading today, this position disclosure. I traded so much. Today was just completely bonkers. I did get stopped at a rig today, unfortunately. But outside of that, I really just focused on trading the positions that I was already in. Today was all about the market. Today was all about just trading stocks really as a proxy to the market. There were certainly some areas out there that were a little bit more relatively strong, some areas that were a little bit more relatively weak, and focusing on relative strength and relative weakness certainly helped to be able to capture this move. But like we said in the morning meeting, today was a day to be aggressive. It was a day to focus on the indices and things that were going to be correlated to the indices. That's really, even as I was trading stocks, I was really trading the market. The S&P today, the SPY's closed up. As of right now, at least, we're up... we're down $2 already. Well, as right now, we're up 1.1%, but we're down like $1.50 in the SPYs since we closed, which doesn't surprise me at all, just with the way this market's been moving. Q's here up 3%, and the IWM. Q's up 3%? Did I just read that number correctly? What percentage did we gap down in the NASDAQ this morning? I honestly, my brain in like some ways is like fried. We were down like what, 2.5%, 3% in the NASDAQ at lows? Was this a 6% intraday up move in the NASDAQ? 6.5%? Oh man, David. Woo! It was bonkers. 6.5% intraday up move in the NASDAQ from the lows to basically to the close. And the IWM here closing up 2.2%. Yeah, guys, just totally crazy. Oh boy, trying to figure out where I even start. So we obviously gapped down massively. You know, the key spot that we had been watching for stocks that had not already broken it, like the NASDAQ had already broken it, was the January low, and then we closed at lows yesterday, which is a really bad sign. Really quickly after the market closed, we were trading lower, and then my father and a couple of his buddies are actually here for like a long weekend. They are staying out of my hair. They're doing stuff, skiing and whatever else. I actually am going to be out on Tuesday because I'm doing a snowmobile ride, a 60-mile snowmobile ride through Yellowstone with them. But I had to go pick them up from the airport yesterday. So I was up past my normal bedtime. And I remember seeing the futures really take that dive at like 10 p.m. Eastern when news started hitting that bombs were going off in Kiev and that like the Russian invasion, if you will, had begun. So I knew that we were in for a wild one today. When I woke up this morning, obviously, once again, we were set to gap down really big. You can just see that here on the 5-minute. We can look at the pre-market chart as well. Yeah, pre-market we gapped down, and not only did we gap down, this was the interesting part, we kind of kept grinding lower here pre-market, but there was a couple key things that I was really focusing myself to remember to not panic. And what are those key things? One is that the market is now extremely extended to the downside. Two is understanding what the market did on Monday into Tuesday. So we kind of saw the same initial headlines on Monday that we saw today. And then we got more clarity over time. But on Monday, it had been, obviously the market was closed for President's Day, but we were getting headlines of Russia invading Ukraine. And it was really more the peacekeeping troops, if you will, kind of going into the newly autonomous regions of Ukraine, however you want to describe those two provinces there. But the initial headlines were just, the Russian invasion had begun, and the Nasdaq futures Monday were down 4%. But by the time the equity market opened for trading on Tuesday, we basically had gone back to green. And I really think that that's because cooler heads prevailed with just an understanding of data and statistics. And that's what it kind of comes down to for me a lot of the times. So those were the things I was thinking about this morning, is what the market had just done Monday when we saw similar headlines. Obviously, today was a little bit worse, and recognizing the degree of downside extension, where I really felt like we had to move higher today. It was just going to be a matter of how. So the gap down 100% was a huge gift, because oftentimes when the markets, how many times recently, especially like in here and stuff, when we closed on lows and were extended and we all want the gap down, we didn't get the gap down, we got the gap up, and then it was a really difficult trading day. Today we actually got the gap down that we all wanted when we were in these periods of extremes. And the data and statistics really do show that these types of war skirmishes tend to be buying opportunities. And I loved when Josh, who is in Vegas for a conference today, was able to pop into the VTF with the Art Cashin comment about how betting on the end of the world is usually a losing bet. And I get that, because I know for myself personally, I tend to find myself often as a short-term optimist and very long-term pessimist. That's just me, kind of personally. But as far as the markets go, these types of viable opportunities, when you come into these bear market type corrections, they are oftentimes opportunities to be able to come in and buy, especially in periods of extremes. And periods of extremes tend to give us the largest amount of actual trading opportunity, and it's just about capturing it, right? So we were grinding down pre-market. I do remember pre-market off 210. I finally typed into the VTF on this bar right here at the 8:30 a.m. bar, and we tipped off 210. Sorry, not 210, 410. That it was time to start nibbling on some longs. Even earlier than that, I was saying I think it's time to be covering your shorts here, and then let's be a little bit more patient on the longs. And then when we bounced off 410 there at 8:30, I said let's start nibbling on some longs, but not get too heavy yet. Wanting to wait for the market to open and kind of wanting to wait for an actual signal. So by the time the market actually did open, we opened up at around 411, sort of about $1 off the pre-market lows, which is not a tremendous amount. And I kind of laid out a couple scenarios on how a potential bounce could happen. I felt that a very likely scenario would have been opening panic selling. But another scenario was basically this, which is that buying kind of coming in right off the open. And then probably the least likely scenario I thought was going to be like a midday to late afternoon reversal, where we kind of get that grindy selling downside price action, which is the hallmark of real institutional sellers, by the way, kind of coming in and selling this market with kind of consistent, that consistent overhead supply feeling that the market has had a lot recently, where every time we're upticking into a moving average, we just can't breach it, and we end up kind of just consistently grinding lower. I felt that the gap was too big kind of for that to happen, so I thought that was going to be the lowest probability scenario. But I really had basically in every scenario in my brain that we're going to be rallying today, and it was really just a matter of how you can execute it. And also said in the VTF, a bunch of these other trading sessions that we've been dealing with recently, it's been about, okay, the way that we're gapping here is a little bit tricky. Let's focus on names in play or whatever it is. Today was not that kind of day. I had like 3 stocks on my list, maybe. Like very few stocks on my actual list. I wanted to be focused on the market, things that were going to be correlated to the market, and I wanted to see what was going to be showing relative strength and relative weakness during the day. It was interesting to note that energy gapped up really big and then kind of initially sold off and had a really weak day. We can kind of come back to that and talk about it in a second. But as far as the indices go, it was, opening lows came in pretty much right away. I definitely felt we had confirmation of those opening lows by this candle. by the 9:45 a.m. candle, right? We had this initial opening bounce. Okay, great. But then we got this inside day here, this period of rest on a little lower volume. And when that inside, sorry, not inside day, inside 5. When that inside 5 actually broke to the upside and it was now post 9:45, I was like, okay, this is our opening low. And opening lows and pre-market lows are now going to be extremely important for this market. And if you weren't already long, I think most of us kind of were by then, you definitely know where you can be long versus. One of the first things that I was focused on today was Apple. I called out the Apple buy through 152.50 versus lows. The tape was insane in Apple the second it opened, and that's really what I was watching. And it kind of put in a quick uptick at 152.50, and then it was all over the place, but beneath 152.50, and I said, I think we can buy the break of this 152.50 versus lows, but again, get your risk covered. It broke. That turned out to kind of be the bottom there, and turned into being a great trade. I also love, I think it was Eddie in the VTF, who mentioned to us right as the market was opening the relative strength in Microsoft. So I ended up not focusing on Microsoft personally, though it's a company that I love. But I know, I feel like I'm about to sneeze. I ended up personally not focusing on Microsoft, but that was a fantastic call out that you had there about recognizing that opening kind of relative strength, because Apple was actually relatively weak today, and even though it turned into being a really good trade, and obviously working out because the whole market went up, this probably was actually not the best tech trading vehicle. And I was really thinking for, probably around 10:30, 10:45, I was asking myself why. And it's got to be related to the fact that so much of Apple's profits come from China, and there are some concerns out there that the, Russia-China union kind of coming into play, that maybe, China is going to utilize this as an opportunity to invade Taiwan, and then, maybe if that happens, then the United States starts doing sanctions against China or something. Like, you're really, extrapolating out pretty far here to get to that thought process. But I think that that's kind of what that thought process was, that, maybe at some point, Apple's work in China could actually get disrupted based off what we're actually seeing in Russia and Ukraine. That led to some relative weakness in Apple, though Apple itself still went green. And I remember even saying midday here, when I thought that chop was going to kind of come in, I was like, do we really think Apple can get back up above 160? I thought it was a reach, and we closed at almost 163 in Apple. So it's a really, really solid move there. That's a lot of the stuff I was focused on. I was buying heavy everything that I'm already in. I bought heavy Bed Bath & Beyond today. I bought heavy SoFi today. Then what else am I even in? Just all the stocks that I'm in for the most part. I was coming in and buying them really heavy, and was able to capture those moves. And I got a little lucky with this Apache, to be honest. I still don't know why. And if anyone has an idea why, I really appreciate the information. Apache, so I'm in Apache and Oxy, and I had a position in Rig, but I actually got stopped out of it today, unfortunately. But Apache, I'm pretty heavy in Apache. I'm much heavier in Apache than I am in Oxy. And I don't know if that's even actually a good thing or not, but I'm pretty heavy in this one. And the XLE was trash today, which doesn't overly surprise me. We can try to think about why here for a second. And the other one that did surprise me was just how weak, I guess, Consumer Staples eventually had a bounce here. That's a crazy looking candle. But Consumer Staples today also super weak, still closing down 1.7% today, though well off of its lows. And the other really weak sector that was out there, though also closed decently off of its lows, was the XLF, closing down 1.4%. But really trying to think about it, and then the obvious kind of just dawned on me, which is the probability that the market is pricing in a 50 basis point rate hike in March went down dramatically today. And I personally have always been in the camp that there was not going to be a 50 basis point rate hike in March. I've always thought that it's going to be 25 basis points. But the market was disagreeing with me for a period of time. There was a period of time there where it looked like the market was pricing in a higher probability of a 50% increase in March than a 25% increase in March. and they're saying that because of global instability related to Russia and Ukraine, that now it's a significantly lower probability of a 50 basis point hike. Well, slower hiking, what's that bad for? Well, it's going to be bad for your banks. It's going to be bad for value. So the whole idea of the rotation from growth into value, a lot of that is based off the fact that this, we've talked about it so many times in the past in our afternoon meetings, but a lot of that is based off the fact that as interest rates move higher, the value of cash is worth more. Being involved in these value names makes more sense. It's more difficult for growth stocks to be able to raise money to continue to operate as a loss, kind of, et cetera. There again, we've been through that information a million times. So I think that that's actually what ended up hitting like the XLE more than anything else, because oil itself is still high, and I know you can make the argument that if oil goes up too much too fast, that it would actually eventually also become bad for the energy companies because it can start to hurt demand. But I don't think that we're at that point yet. I still think that we're coming back into a world here where more people are traveling, more people are driving, more people are flying, and I still think that we have a supply and demand issue broadly with energy, where there's just been a lack of supply for a variety of reasons, and now that demand is still kind of coming back online. That's always been kind of the real play there. But I think there's less of an interest in owning value stocks if you think that the interest rate situation is going to increase a little bit more more slowly. But with that said, again, so XLE is down 1.7% today. Apache is up 4.5%, and I'm heavy in Apache. So if anybody's got any information on why this is so like the most relatively strong oil name, I would love that information, because I don't know these companies well enough to be able to say that. I'm honestly just lucky. I'm up pretty good P&L in Apache today because I sold actually some pre-market. I ticked the pre-market high. You guys got to check this dot out. Let me. This is luck a little bit, but you got to check this dot out right here. Look at me getting filled here pre-market, and that was actually like a chunk of stock here that got filled on the offer for me. Someone just took my offer there. I was willing to sell it, and then I started coming in on the bid onto this dip after the market actually opened. When this looked like it was going to break higher, I was coming in and buying in this and then it ended up being so relatively strong for whatever reason that it ended up being a pretty good one for me. Yeah, little lucky there, Will, for sure. But we'll take luck sometimes, right? I prefer skill, but I'll take luck sometimes too. And I still don't understand why it was so relatively strong. I know people are asking about Oxy, which I'm also in. Oxy, I was so busy today between my own trading and a million other things going on. I didn't have time to analyze what was actually going on here with Oxy, but I saw that they reported midday, which is really odd. So I don't know if that was a leak or what. Most of the time, if a report comes out midday, it means that it was somehow leaked. I remember seeing that with Google once years ago, and it was just bonkers how the stock traded midday that day. But yeah, it looks like it leaked. It initially traded higher. I don't even know what the numbers were, to be honest. It looked like a beat on EPS. I really didn't have time to look. Then they halted it for news pending, but the news was already out. And then they gapped up on that, a little bit sloppy, and kind of closing okay. So, Oxy, the other name that I'm swinging for oil stocks, also was up 2%. So it's like the two most relatively strong names. So it's an okay looking candle here for Oxy, but these things need to negate this negative Maribozu. So you still need Oxy to get above $41, I think, to start looking a lot better. But it's certainly a constructive day. And even with Apache, I'm really happy that it was relatively strong. This thing's got to get above $33 to start looking better. And that was it. Congratulations to the team here, because a lot of you guys were saying that you had really good days today. A couple guys said that they had their best days of their professional career so far, even outside of the VTF. Some of you guys who were in the VTF were shooting me text messages, just kind of giving praise to the Pro Desk and the work that we do here, for kind of giving you the conviction for being able to come in and be aggressive early on today, because today was the day to do that. One of the things I always really preach, and I think that this is a big key to successful trading, is you got to know when to be passive with the market because you don't have an advantage, and you got to know when to be aggressive with the market. And it's like I said in the morning meeting today, today's the type of day where if you really go for it and you got smoked, I'll be proud of you. And if you really go for it, you made a lot of money, I'll be proud of you. But on a day like today, today is not the day to be sitting on your hands. So if you went for it and you just executed poorly, or you had the wrong stock and it somehow stopped you out and made a new low, or you focused on the wrong sector, but you recognized that there was going to be a lot of opportunity out there and you went for it and it just didn't come together, I'm proud of you for recognizing to go for it, and it's going to pay you in the long run that you're willing to do it on days like today. But you got to be involved in days like today. Today's a day, we talk about days where, your volume should be, whatever your average volume is, some days it should be a lot lower than that because there's not a lot of opportunity. Today's the opposite. Today your volume should be much higher than it is typically because there was just so much opportunity to be able to make money today. And some of you guys did it, so congrats. That's all I got. Happy to go through questions. I have a hard cutoff at 5 o'clock today because I got a meeting. All right. Yeah, the daily candle, right? Look how crazy this daily is. And it's a positive Maribozu, right, on high volume. This would indicate that there is potential for follow-through back into equilibrium, because keep in mind, even with this daily candle here, we're not in equilibrium. EDMA on the daily is still like 433. We're still like $6 away from equilibrium in the SPYs. Qs are basically there, though. Qs were leaders. They were much closer. And IWM actually was basically there, too. So we'll see if this market's able to give any follow-through, if this was just another bear market rally, because those bear market rallies can certainly be, again, statistics, right? Statistically, the biggest up days in the history of the market usually happen in bear-type markets. And sometimes those are oversold bounces, or sometimes it's after the actual bottom comes in. And I'm not in a position to say that the absolute bottom is in, but similar to that day in January, that was also insane. Both this day and honestly today were probably the two biggest negative to positive P&L days I've ever had in my career. They're days to take notice of, right? Because the last time we had a real major day like this, it did turn out to be a short-term bottom for a period of time. So we'll see if this has similar follow-through or not. Cool. Back to the chat here of the virtual trading floor for questions. Sunny saying, I feel like we have been waiting to buy a gap down all year, but haven't really had a proper chance until today. 100%. There's been so many days here where we closed really weak, where we wanted a gap down, and the gap down didn't actually happen, and today we finally got it. So, awesome. From Cody, I mentioned earlier at 2:15, the 2:15 5-minute candle on Apache. 2:15. 2:15 5-minute. This one right here. Yeah. I said it wasn't technically a hammer. I mean, it's still the shape of a hammer. You can call it a hammer. I just you can be a hammer without being significant for us to trade off of. It's, anything that's the shape of a hammer is technically a hammer, but doesn't necessarily mean that they're all significant to trade off of. So, this is kind of like a hammer type candlestick. I think it actually has a little bit of a different name when the opening closing price is the same like that. I don't remember what the name is called, but it more or less means the same thing with that kind of lower tail there. But the placing of the candle was no good. And I guess the volume's a little bit of a pickup, but it's kind of just average. So that 31 was a well-defended price. Kind of like the terminology there. I'll just have to take your word on it because it was a little bit sloppy through it. Or I guess earlier in the day they were trying to defend it. And the fact that it dipped below and buyers took control made me feel like it was a good buy setup. Obviously, hindsight is 20/20. Just wanted to know if my reasoning is correct. Yeah, so the way you're thinking about this is correct. I'll start by saying that. And I do like the terminology that you're using when you call something a well-defended price. And that's on an intraday basis. I usually prefer, that type of thought process to be more on a daily chart thought process. But on an intraday basis here, you can clearly see that the are trying to defend it off $31. It is also kind of making lower highs off that, which can be a little bit nerve-wracking. They break it back down, they snap it back up, and then you see this candle come in. I don't like the placement of the candle, is really what it is. A hammer is a candle that we want to use as a technical entry, and you can refer to my candlestick class. You can review that for more information on this. But a hammer candlestick is a candlestick that we want to use for technical entry when we have extension and high volume. And we really have neither of those things here. There's no extension. It's right into the equilibrium zone, and it's not really on high volume. It's on a little bit of an uptick on this bar compared to a couple of the other ones around it. But for the most part, it's kind of fairly average. So I don't think that this, in the long run, is going to pay you, despite the follow-through that it eventually had. I think that you were able to increase your probability of success with a long there by referencing the information about $31 that you're providing here. But this type of trade, I broadly think is going to be really difficult to be able to capture consistently. And I don't think that we just want to be looking at the result here of the move that it actually gave and saying that that means that it was 100% the right move. Because the market obviously continued to rally. Energy gave a good rally into the close as well, and Apache was relatively strong. And that was the one thing that I did mention to you also, was I think more significant than maybe this candle is just the relative strength that the stock is showing. So that if this sector in the market can catch a bid here, this one will probably be able to catch the biggest bid. So again, I guess that would actually be another piece of information that would be positive for your trade. I just don't love the actual mechanics of the trade itself, if that is what actually makes sense. If that is what actually makes sense. Man, I can't even use words anymore. From Bill here, I know you mentioned the 50 basis point likelihood has come down with Russia-Ukraine news, but any thoughts on further decisions being impacted by a war? So my any further thoughts on decisions? I assume you mean rate decisions. Yeah. So I mean, the Fed obviously is paying attention to the economy, and they may need to be more accommodative if the economy starts having big problems. My thought process on Russia-Ukraine, and I'm gonna go with this thought process until the world proves me otherwise. I'm gonna go out on the limb and say that this leading to World War III, which there has been chatter of that, especially in the media, is a low probability scenario. Not a zero probability scenario. I'd like it to be a zero probability scenario for obvious reasons. I'm going to say it's a very low probability scenario. And Ukraine, again, as much as I feel for the people who are there, who are having to deal with this, it's really a very small economy. And yeah, the situation with the energy supplies that come from Russia can have an impact on the European economy, but I think that the world will be able to find a way around that kind of in the long run if we have to isolate Russia and Ukraine. So provided that this just stays kind of at this level, then I think it's fine. I think where we could come into a really big problem, and again, I'm inclined to think this is not going to happen, and that's going to stay in my thought process until the world proves otherwise to me, would be if we got into a situation where China and Taiwan, China has a military invasion of Taiwan, and the rest of the world feels that they need to act on that. I kind of have, I guess, what is a little bit of an unpopular opinion on Taiwan, on my thought process as kind of an American. But I'm happy to kind of explain it. And again, I don't want to get into politics. I really try very hard to keep personal political views to myself, and only because it doesn't help anybody make money. Politics, insofar as we need to understand political ramifications of political decisions. For example, I don't know, just a simple one, the Trump tax cuts, right? I'm not going to come in and say if I think it's a good thing or a bad thing because that would be a political opinion. I just want to come in and say what I think the ramifications are for those tax cuts for the companies that are in the S&P 500 because that's what makes us money. So when it comes to Taiwan, and that's where the real big risk factor is, right? Is if we have to repeat this process against China because something happens. And I really, really hope that doesn't happen because that would be bad. Because it's one thing if Europe's not getting natural gas from Russia anymore, we'll find a way around it. It's something entirely else if we completely lose the supply chain situation that we have from China. And that would be bad. That would be really bad for the economy. And then, yeah, I don't understand how the Fed is going to be able to raise interest rates because the economy will be imploding if all of a sudden China and the United States have such a rift in their relationship that we are no longer continuing our trade. That would be a disaster. But I guess what I was going to say about it was, I think it was Richard Nixon in 1974 made the agreement to the Chinese government that China was part of Taiwan. We said that back in the 1970s. That was us. My opinion on this is that if we were going to make a real stink over something, we should have made a stink over Hong Kong. Because with Hong Kong, which now has basically been absorbed by China, there was an agreement out there that still existed through, I think, 2050 that the United Kingdom was enabling Hong Kong to be able to maintain a degree of autonomy. But we've done literally the opposite with Taiwan. We said in the 1970s as our official stance that Taiwan is part of China. And now I understand it's strategically important, mainly because of semiconductors. So it's really something that we need to pay attention to, because if this leads to this type of rift, that would just be awful for the economy. So we'll see if that happens. I really hope it doesn't come to that point. I think it would be bad for everybody. And I think that broadly people look out for their self-interest. And I think that it would be bad for China and it would be bad for the United States if that type of situation occurred. So we'll keep an eye on that one. So I'm inclined to think it's not going to happen. Maybe the market is a little nervous, and that's why Apple was relatively weak today, that it could, and it's something we do need to pay attention to, but I'm going to operate as if it's not until I'm proven wrong. Anyway, hope I didn't get political on that, because it's not my MO here. My MO is to focus on making money. From DJ, do you ever short stocks that are extended because of an overreaction to good earnings, an upgrade? Do you ever go long on stocks that are downgraded, have bad earnings because they are overextended to the downside? Yeah, so extension is something that you want to pay attention to. Counter trend trading is harder than with trend trading. I'd rather be trading with the trend. I'd rather be trading with the direction of the momentum. There's been so many examples of times over the course of my career where I'm trying to short a stock that's ripping higher because I'm like, oh, it's up too much. And a lot of times I might end up making money at the end of it. Oh, just spilled my glass of water. A lot of times I might end up making money at the end of it with a whole lot of stress and heartache and frustration in the process, as I was too early and the position goes against me and I get stopped out 4 times and eventually I get it. It's very hard. And that's why I always preach, if you are going to take those types of overreaction, overextension type moves, you still want to trade it in the direction it's moving. So if you want to buy a stock because it's extended, you think it's overly priced in the degree of extension to the downside, okay, fine, but let the market prove to you that your thought process is right. And the market will prove it to you by starting to move higher. And if there is going to be a real major retracement or reversal, you don't need to be buying the bottom penny. You're better off buying a little bit of a higher price and being able to get a higher probability of success because you're moving, it's trading in the direction of the movement. From Mike Straub here, so many days have been, let's be patient off the open, the gap is going to make it difficult, and then boom, today, gap down and extension, be aggressive, Be aggressive. I love it. Cool. I think I covered it for you there, DJ. From Terry Jones, our RUSL. That's the 2X bull. That's what I thought. And ERUS. That is probably the regular one. Are they worth a look for a long position, looking for a snapback in 1 to 3 months? Yeah, that kind of got brought up a little bit in the morning meeting today, along with the stock Yandex. Yandex, which is down 40% today. Yandex is like the Russian Google, so it's a very tradable company. I remember when this thing actually IPO'd. Massive volume today. My thought process on this, at least for this morning, and we can talk bigger picture as well. My thought process on it for this morning was I didn't want to touch these things because I don't have a feel for it. You know, my feel for one of the things that was in my thought process this morning was I'm looking at like my swing position in Bed Bath & Beyond, gapping down like 3-4% against me this morning, as well as a bunch of other ones, and I'm asking myself, what the heck does Russia have to do with Bed Bath & Beyond? Outside of maybe a massive deterioration of the economy and people go to Bed Bath & Beyond less often. And again, I think that has more to do with inflation and interest rates than it actually does Russia. So that's why I really wanted to come in and be buying the dip on these stocks that I felt were not overly impacted by Russia. Your question here is obviously about directly trading the news of Russia. If you're getting involved in the ETFs that represent the Russian market, or you're getting involved in Yandex, you are making an actual bet on how the situation with Russia is going to turn out. And I don't have the knowledge or the conviction to be able to do that. Even on a 1 to 3 month scenario, I don't know. I mean, it looks like Russia did some real damage to themselves on the world stage today. So I genuinely don't know, Terry. I really don't know, and that's why I'm staying away from it. So I'm staying away from Yandex. I just don't feel like I have an edge there. I have no idea what the Russia situation is going to look like in 3 months. I have no idea if they did what they're going to do, they got these other provinces, and then they're going to start backing off a little bit, or if this is, like people have been saying, the beginning of Vladimir Putin trying to recapture the USSR. And however you think about it, it's going to have a very different outcome, in that 1 to 3 month period of time. And I just genuinely don't know. For Mr. Trees, I see the gold candle today. I sure did. They wrecked that thing all the way back down. Almost looks like a mistake, but it's not. Why do you think gold spiked and sold off so hard? Probably for the same reason that the market got bought up, I guess. The fear trade came out. What did TLT do today? That came down. The fear trade just came out of the market today, is really what it was. And it was definitely one of these buy the rumor, sell the news situations, but the opposite, right? They sold the rumor and now you bought the news. Everyone was so afraid of what was going to happen if Russia invaded that they totally sold it off into it, and then the overreaction kind of occurred. So they bought up risk assets and they took down safe havens today, and that includes gold, it includes value stocks, it includes selling off the TLT. So that's really what it was. I think it was an initial overreaction into today's event. Just reading Gabriel and Mike's comments. Yep, agree with you guys. All right. It's 10 to 5, and I got a meeting in a few minutes. I think we covered everything we needed to cover. Today was absolutely bonkers. Great job to the team. You know, we really came in and had the conviction today to make today work. A lot of you guys performed really well. Let's keep learning. You know, these situations like today's trading session don't happen very often, but when they do, this can be the type of day that makes your month or makes your quarter or potentially even makes your year. So I was able to throw up some pretty good P&L for myself. I hope you guys did as well, and I'll see you all tomorrow.